As tensions in the Middle East go, so do oil prices. Next on the Energy News Beat Daily Stand-Up.
Israel targets Iran's South Pars field in escalating airstrikes. Iran retaliates. Michael, I'm having a hard time getting a nail down on the damage, but let's go through this. According to the IRGC affiliated media and Post on X, the attack targeted critical infrastructure in Phase 14 of the South Pars field in Bushehr province, causing fires, prompting an immediate response from Iranian forces. This is incredibly significant because this also ties to the Leviathan field in Israel has been shut down, and that Leviathan field in the Mediterranean is causing Egypt a gas shortage. Now there is going to be a huge impact to LNG exports from Qatar that is going to be impacted on this. So there's 78 deaths and over 320 casualties so far. And again, we're not on the edge of that kind of news. We're here to cover the energy side of this, and the operators in the South Pars gas field, Petropars, a leading NIOC subsidiary, development and production at Phase 14, Iranian offshore engineering and construction, the IOC handles the offshore platform. This is going to be a huge issue as it settles out.
It's going to be unbelievable. I think everybody who's in the oil and gas business saw what happened to oil Thursday night when this all took, or I think it was Wednesday. Was it Wednesday or Thursday night? I think it was Thursday.
Starting Wednesday night and Thursday, and it's about another 2 weeks it's going to take to isolate out. I saw General, I believe it's King, on Maria Bartiromo this morning on the Sunday show, or when we filmed this is Sunday, and he was basically saying that they are going after the energy. If he says they're going after energy, the oil and gas depends on how far they take it out. Let's go to that in the next article. Is closing the Strait of Hormuz the apocalyptic scenario for the oil market? Michael, you kind of laughed and said yes. The Strait of Hormuz, a narrow 21-mile passage between Iran and Oman, the world's most critical choke point for oil and liquefied natural gas trade, often described as the jugular vein of global energy. It facilitates the flow of roughly 20% of the world's oil and a quarter of its LNG. I think that is, but I also included a post in this article as I wrote that. How likely will WTI get how high? And it's right now it's predicting $94.10 is on this betting app. So key customers hit China, India, Japan, Europe. This is turning out to be pretty bad if Iran threatens to go through with this, dude.
Well, this is, I love this little tweet you put in here, the oil prediction tweet, because it truly goes back to a little bit of like what you're saying. Hey, I think oil is going to hit 100. Now, I'll cover a little bit of where oil prices might go in my segment, but this goes to show you what we're seeing is the geopolitical volatility built in. So you can now accurately see that there was about a $7 basically geopolitical factor built into this. Now, it depends what Iran does in response. They've done a little bit. Does this all-out escalation? Does the U.S. get involved? There's a lot we could cover. And Stu, like you said, we want to focus on energy, but if the Strait of Hormuz shut down, like you said, that there's 17 to 21 million barrels per day that flow through that strait, which is, as you accurately pointed out, about 20 to 30% of the global supply, which if you just do the math on that, you end up in that $90 to $95 range, and this oil betting, Kalishi odds has it at 94, which is at the upper end of that range. So it's not far off. Now, do I think the Strait of Hormuz will actually be shut down? I don't think so. I don't think it would happen. I think it would be disastrous. I think the market dynamics understand the apocalyptic nature of what that means. So I don't think they will do it. But if it did, I didn't think Israel was going to bomb Iran, and we wake up Wednesday night and all of a sudden rockets are flying.
Well, here's my take. Under President Trump in his first term, Iran was down to 200,000 barrels per day, estimate somewhere around in there. Under the Biden administration's debacle of a presidency, they got up to 3 million barrels per day. They funded $800 billion worth of whatever the number is, unbelievable amount of wealth that they generated under President Biden. Now, if they take out those 3 million barrels per day, that would probably keep us in the $80 range.
Yep.
If we get the geopolitical stabilization, we're going to probably level out at 70, 75. But the Strait of Hormuz, if that thing is absolutely wiped out, all bets are off. I mean, it could be a short spike way over 100, and then everybody panics, and then demand destruction kicks in, and then the price comes back down. So all I can say is buckle up, get a G suit. It's going to be a rough ride.
It is. Now, one thing quickly before we jump to point out, it's not just oil that flows through the Strait of Hormuz. It's 25% of LNG to customers across Asia, Europe, and beyond. So you think in Europe, you think you're already paying higher prices for energy? Buckle up, as Stu would say. If this were to happen, natural gas prices and the spot price would go through the roof for LNG.
And I saw President Zelensky meme on President Zelensky. He's like, Putin, very, very bad, man. And now nobody loves me. They're not going to pay any attention. Zelensky honestly is in trouble. We don't want two wars. And then we have all of the Democrats funding all of these no king protests all over the place. That is a whole nother thing. We don't need three wars. Let's go to David Blackmon. David Blackmon, Trump ends Newsom's terrible week by killing his EV mandate. This is an outstanding article on the Daily Caller from David Blackmon. I recommend following him both on his Substack as well as the Daily Caller. He's also got a great couple articles in Forbes as well, too. This week just passed a rough one for California Governor Gavin Newsom. Early in the week, Newsom's complete lack of leadership in his home state combined with a dereliction of duty by Los Angeles Mayor Karen Bass to justify President Donald Trump's move to activate both the National Guard and 700 U.S. Marines, who they have not fed in about 3 weeks, and they need raw meat. So good luck there. Under this previous administration, the federal government gave right-wing radicals in California dictator powers to control the future of the entire car industry over the country, Trump said in remarks preceding the signing. It's been a disaster for this country. I couldn't agree more. Governor Newsom, you are absolutely despicable leader, period.
Yeah, I mean, he's really I mean, and what's funny is about 6 months ago he was trying to make the pivot to the center. You know, he was having all these right-wing people on his podcast trying to play himself down the middle, but he truly has come up with Trump derangement.
This is Gavin calling in. He's calling in. No, Gavin. Sorry, Governor. You cannot come on this podcast. Sorry. Have a great day.
Well, he's got to clean up the oil slick that's going on outside because he decided to go swim in some water. I mean, the fact that, again, I come back to, if EVs are going to win, they need to win without subsidies. It's one of the reasons why, ironically, Elon was a little mad, because he deep down knows that for electric vehicles to work and be competitive, they need to have these subsidies. And that was, one of the nice things that wasn't in, it's one of the few things that got taken out of the big, beautiful bill, was these EV subsidies. About everything in the kitchen sink was also in it. Now, I think some people might accurately, and I don't want to, maybe accurately is the wrong word, would point out that there's an externality associated with fossil fuel vehicles, which is the quote unquote carbon emissions. Now, we can dismantle that all day long from a standpoint of the amount of emissions that are coming from companies doing things with coal and all that jazz. I mean, the what's going on with cars isn't dropping the bucket compared to all that stuff.
Yeah.
So, but go ahead.
Sorry, I just say this. You're teeing it up for the next article. The automakers pivot to hybrid sales as EV sales lag behind expectations. Will the EV market bifurcate into Tesla versus all the other hybrid? I think your points are spot on, Michael.
Yeah, let's just jump to that one. Let's go.
Let's go. I'll tell you, I wrote this one and it was a lot of fun. And when you sit back and take a look, EV sales are in the market now. Listen to this. In 2025, Q1, ICE sales are now 78% of the market. That's down from 80%. And where is it being picked up from? Hybrid sales. Hybrid, I did not realize was really starting to kick in into the millions of units. In 2024, hybrid sales was 1.5 million units. ICE sales was 12.6 million. EV was 1.2 million or 7.7%. Hybrids 9.6, and the ICE was 80%. Now you're looking at hybrid sales at 13 and EV sales are still at the 7.9%. So I think hybrid is just now gearing up.
No, I completely agree with you. And I mean that chart you've got in the article is kind of crazy. And we've been on this for a year now. We've put our stake in the ground. We believe hybrids are going to outlast EVs from the standpoint of it's what a battery is designed to be, a backup power, and it's what a hybrid is. It's backup power. It increases your fuel efficiency so you can get a lot more miles out of a single tank of gas. It allows you to be less harsh on your engine because you're able to do a lot of other things that are very interesting. So I mean, we put our flake in the ground. Now, luckily, the data is rolling back in, and the cost of an EV is a lot higher than your cost of a hybrid.
Exactly. And I added in here because I've been looking at day trading on Tesla, and I think that Tesla is still going to be a great buy. I don't give investment advice. However, Tesla is not an EV company by itself. I think they will be the sole US manufacturer of 100% EVs. I think they're going to be the last man standing.
Don't take your day trading advice from Stu. I
No.
promise you that. All right, let's move to this last one here in this fire in the
Oh,
marathon
this is
facility.
a heartbreak for Texas City, Texas. A massive fire erupted at Marathon Petroleum's Galveston Bay Refinery in Texas City, sending back plumes of thick, toxic smoke into the sky and prompting a shelter-in-place order for residents on Highway 146 Bay Street. Been there. The Galveston Bay Refinery, one of the largest in the United States, processes up to 593,000 barrels of crude per day, producing gasoline, distillates, diesel, aromatics, heavy fuel oil, dry gas, gray coke, and propylene. It is 3% of the U.S. refining capacity. I think I saw something on there saying that could bump diesel and gasoline in Texas heavily.
Yeah, I mean it definitely will. You will see a pinch in gasoline prices, not just because of the spike from this Iran Israel tit for tat bombing, but to double down, this will cause gasoline prices to definitely increase. How much, who knows? But as we move into the summer driving season, which we kind of probably already there, it's only going to squeeze those gas prices more. And
You
it's going to
bet.
make for a super interesting summer. As you mentioned, Stu, that's, about 250 to 300,000 barrels per day, or about 10.5 to 12.6 million gallons daily, which is enough for a little over a million vehicles per day, and about 100,000 to 150,000 of diesel, which really is what affects prices. You want to know what's the biggest cost for the rise of the price of goods? Well, one of the key inputs is trucking, and trucking comes down to diesel.
Let me add this. Guess where California is buying 70% of their oil? They don't get it from Alaska anymore. They
Russia?
don't they don't drill their own. They get it from Iraq and
Mm,
Iran and China.
mm,
70%.
that's
So
nice.
the Hormuz problem, Israel, Iraq bombing, bad for California. Holy smokes. Governor Newsom is absolutely got a disaster on his hands.
Can't you tell we just love California?
I love California. I just don't like him.
No, absolutely. All right, let's jump over and quickly cover finance, guys. Before we do that, let's quickly pay the bills. As always, thank you for checking us out. World's greatest website, energynewsbeat.com. Hit that description below for all links to the timestamps, links to the articles. Check us out, theenergynewsbeat.substack.com. com, a great place to support the show, whether you sign up for a free or a paid subscription. We really appreciate all the support there. We're dropping a lot of content that you can only get on Substack. It's a lot of analysis. You go to our energynewsbeat.com. We're going to show you the news. We're going to give you a little bit of wondering how that pertains to you, whether you're in the investing space, whether you're in the oil and gas space. But Substack, what it's going to do is it's going to give a lot of analysis, and it's a great place to support the show. Appreciate everybody who has subscribed there. We'd also like to quickly shout out Reese Energy Consulting for sponsoring and making this show possible. We really appreciate their support, guys. If you are in the midstream space and you're not working with Reese Energy Consulting, you're doing yourself a disfavor. Whether you are two guys in a garage or whether you're a Fortune 50 publicly traded company, they have worked with everybody in between and have the ability to make your life easier. Check them out, reeseenergyconsulting.com. Tell them Energy News Beat sent you. It's a great way to support them and support the show. And finally, guys, if you're wondering whether or not it's the right time to put oil and gas in your portfolio, you might be thinking that now that there's a war going on in the Middle East, right, wrong, or indifferent. That's what you might be thinking. Check out investinoil.energynewsbeat.com for an oil and gas portfolio survey. Fill it out, and then we will send you a bunch of information, specifically an ebook on what it looks like to invest in oil and gas and point you in the right direction based upon your responses, guys. So that's investinoil.energynewsbeat.com or hitting the link in the description below. But Stu, let's just run through quickly top line indices on Friday. S&P 500 down about 1.3 percentage points. NASDAQ down 1.29 percentage point. 2 and 10-year yields jumped about a percentage point. Dollar index up about 0.3 of a percentage point. Bitcoin dropped all the way down to 105,000, which is interesting. You would have thought with the craziness going on with what's going on with Israel and Iran, Bitcoin would rise, but it's fallen now, 105,000 sitting there. Crude oil, I mean, what's to say? Top line headline up 7.6 percentage points or $4.94 on Friday, closing up at basically at $73. The open here in about an hour or so looks to open about 73.18, so even higher. Brent oil is up to 74.65. Natural gas $3.58. But guys, unbelievable what happened, Thursday night rolling into Friday. Oil settles up 7% as, again, top line, as everybody now knows, Israel went ahead and struck Iran, mainly targeting their nuclear stuff. As we mentioned in the open, there is some oil export terminal being targeted. Right now there are no, as on Friday, there were no oil flow impacts. So what you saw with that 7% spike was mainly what I call the geopolitical impact risk of what might happen if all of a sudden all-out war broke out in the Middle East. I think what you're seeing now is, with what's happened this weekend, I think you're seeing a much more targeted oil attack. So I think that will change. Otherwise we did see rig counts drop by 4 on Friday. We did see the frac count spread drop by 4 on Sunday. So a pretty unbelievable, drop from both rig count and frac count spread. It'll be interesting to see how those things change relative to what we're seeing here. If now oil, the new floor is 70 based upon what's going on in the Middle East, it may allow more drillers to come back and enter in. So we may see rig counts flip. I think an interesting note, Stu, we did see 24 rigs in Canada get added on Friday. So that is a huge interesting knock. I think the difference is Canada has a little bit lower break-even prices now. It's a little bit harder to drill wells in Canada for a variety of reasons, but they have much lower break-even prices. So if you're a company that operates both in Canada and the United States, shifting your drill schedule around might make more sense. Final thing I want to cover, BP takeover speculation heats up as UAE oil giant ADNOC, or the Abu Dhabi National Oil Company, enters the fray for gas assets. As we've kind of talked ad nauseum here in the finance segment over the last couple months, Stu, BP is definitely looking to sell, and there's a couple different companies kicking the tires. You've got Shell, Exxon, and Chevron, who have all been linked to potentially taking over the total assets. But as of Friday, Abu Dhabi National Oil Company jumped into the mix, really mainly looking to acquire their LNG assets, while they've also told them they are maybe interested in just buying the whole thing outright, which, I mean, you want to talk about you think it's going to take a while for Chevron, Hess, and Exxon to work out through an intermediary. I think the whatever the Federal Trade Commission is in the UK is going to have a field day with this one. And I would be very interested to see if a full takeover is even possible. It seems much more likely that they just go get their LNG assets. As we know, most of these Gulf states have gone all in on LNG. We've talked at nauseum about how Qatar has lined up and basically been signing a 30-year LNG agreements, with multiple countries. Saudi Aramco has done the same thing. Abu Dhabi National Oil Company has done the same thing. And this would only move to bolster. Obviously, everybody is looking to, obviously everybody is saying no, this isn't going to happen. What's interesting is Abu Dhabi National Oil Company would most likely do this deal through their international unit, which is known as XRG. And a little twist in here: former BP CEO Bernard Looney, who left under let's just say interesting circumstances with some chicanery going on with someone who worked for him. I'll let you guys Google and put those pieces together. He sits on XRG's board. And so he may have a little bit of inside knowledge relative to where these assets are. Obviously, sitting on the board is a little bit different than sitting in kind of the CEO position from the standpoint of you're not necessarily pulling the day-to-day strings, but you can be from a high level pushing it. I love this quote from Quilter Chevrolet, or an analyst out of Quilter Chevrolet. His name is Marzullo Corelli. He said that their interest of the BP's is significant and will drive the price upward. The rest of his quote is that says it's likely that ADNOC would consider a full bid for BP as a whole, given the company would not be strategically interested in BP's oil assets. Few other listed oil majors might be. So I agree with that sentiment. I have a hard time seeing how they're going to bid on the whole thing. Obviously, from an oil asset standpoint, true, but I also think from a regulation and a regulatory standpoint, they also know they'd never be able to get it through. So I think taking out their LNG assets is much more strategic, but very interesting. There's a lot going on with BP, and we could be sitting here a year from now and BP literally could not exist in the form it exists now, whether a complete takeover or a complete bifurcation of their assets. So that's all I've got, Stu. My favorite part of the week. What's keeping you up at night this week?
Well, this week is wondering how much of the Iranian oil and gas assets are going to be destroyed by Israel, because that is going to be critical. But on this BP takeover story that you're talking about, I'm going to be adding some things to this story, and that is, would it be better for the BP as a corporation to move to the US before they started piecemealing everything out? Because if they went to the US stock market and moved as a corporation to the US, I think they'd make more money for their shareholders.
No, it's really true. So I think it's going to be fascinating to see what happens. We appreciate everybody who starts their week with Energy Newsbeat. Again, hit that description below. Sign up for our Substack, investinoil.energynewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll be with you all this week, guys. It's going to be crazy. We'll see you tomorrow.